Okay, all right. Mitesh, thank you very much. Good speaking with you. Appreciate you joining in with that. Dipan Mehta, Director at Ellixir Equities, is joining in. Dipan, coming to you a little later than usual. Thanks very much for joining us. It's a Friday, but not a good one because significant pressure. What do you make of it? How would you characterize the sell-off? Do you think it gets worse? Or are you already using this to buy what you like? Because there is a bit of collateral damage as well, unrelated damage as well.
Good afternoon, Prashant, and thank you for having me on your show. I think the biggest problem here is the sentiment. And clearly, trader sentiment has been hit by the research report which has come out on the Adani Group. And apart from that, also, I think analyst after analyst, especially the FPIs and FI investors, they have been highlighting the expensive valuations of Indian stocks. And now that is coming into play over here as well. And that's why we are seeing this kind of a risk-off trade as far as India is concerned. But I think what we are seeing here is a shakeout taking place of all the weak players and the leveraged players over here. Stock gradually moving into stronger hands per se. And also there is a compression of the price earning multiples taking place over here because by and large, even on good results, stock prices have corrected, which means the P multiples clearly have gone down, and that provides a bit of a comfort and margin of safety from a long-term investment perspective. And to answer your latter part of the question, I think this is a great opportunity. This correction is a great opportunity to get into good quality growth businesses, outstanding businesses, where valuations have gone a bit haywire. But now I think they may have come back into a reasonable zone. And if further correction takes place from here, then there'll be decent margin of safety as well. So I think investors, especially long-term ones, who are focused on buying good quality, outstanding businesses where there's earning visibility and good corporate governance standards, for them, this is a very good opportunity and they should look at increasing their exposure to equities.
Okay, all right. Hi, Dipan. Dipan, you know, we're talking a lot about all the stocks that are down. Let's talk about a couple of stocks that are doing well. What about PVR? Did you watch Pathan?
No, but looking forward to it perhaps this week.
You know, yeah, I mean, it's an interesting movie. I did catch it yesterday, and it's quite an action-packed one. I mean, I give it a thumbs up. But, Dipan, you know, the important point out here is 55 crores opening. Yesterday, they built on that, and they've still got the entire weekend, you know, to build on to that. Now, that's very, very good news. I think the ratio is approximately 48-52% between the, you know, the producer as well as the you know, PVR. What's your sense? You know, from here on, at around 1,700 rupees odd, everyone had thrown in the towel. Bollywood's not giving us good content. Out of nowhere, Shah Rukh Khan comes in there and bats well. Your view on PVR? The last couple of days, in fact, the stock is up 6%, while the markets are much lower.
See, I think it's a good trading opportunity because all of these numbers get reflected in the March quarter, and even the December quarter was pretty decent because of Avatar. But that's going to be the problem area with multiplexes, that you're going to have lumpy earnings. And that doesn't really, kind of enthuse long-term investors per se. And then there's always this fear that entertainment habits are changing. And, you know, trying to predict box office collections is more difficult than even trying to predict stock price movements. So I would be a bit cautious at these levels. And I think that you can have a trading rally, but, you know, I don't see very good earning visibility 2-3 years down the line. And business per se is quite capital intensive as well. So return ratios are on the lower side. But on the positive side, you have a merger between Inox and PVR. So it's a bit of a confusing picture. And at least I don't get the conviction that, you know, it's going to be a great long-term play. So I'm not looking at investing in multiplex at this point of time. There are so many opportunities in other consumption-oriented businesses, in similar kind of businesses like QSR, retail. I think there's better visibility and there's better longevity of earnings over there than perhaps in the multiplexes.
You know, there's one point, Nuvama Research, erstwhile Edelweiss, they've also added another thing which is pro-PVR. They're saying that we see international OTTs cutting their budgets by 30% this year. So this bodes well for players like PVR, right? So yeah. OTT was the big competition, and we kept talking about how people are moving to OTT consumption. But if OTTs are under stress and it's a challenging environment and they cut their budget, then again, you can go back to the movies, right?
Guys, I'm so happy that you all have started talking about like the happier things. It is Friday for what it's worth, right? So, Nigel, thank you for that turn. It was much needed. In fact, I was going to ask Dipan about a related sort of stock that's actually doing well. Dipan, good talking to you after a bit of a gap, first of all. So great to have you on the show as usual. Will you, you might not go to, you might not buy PVR, but would you drive to the theatre to watch the movie in a Tata Motors EV maybe? I mean, look at the stock. The earnings have been blowout. This is one stock that hasn't rallied like banks, for instance. Would you be a buyer?
Good morning, Subhi, and thanks for having me on your show. These Tata Motors is a very complicated company. And just when you expect that the company is not going anywhere and the results may not be that impressive, they suddenly pull a rabbit out of the hat. And that's been the case with Tata Motors. There are far too many moving parts over here. And sometimes you do get a surprise earnings like this. But by and large, I'm not that positive on Tata Motors because when I compare with what I have, what I can buy like M&M or Maruti, I think there's greater visibility over there. With Tata Motors, you're essentially getting into GLR, and then when you get into GLR, you look at the US market, the European market, the Chinese markets, and one geography is doing well, but the other two are doing badly. So it's a bit of a jumble over here, and I don't get the comfort that the earnings sustainability will be there on 3-5 year basis. Whereas I get more comfort when it comes to M&M, Maruti, which are purely domestic focused companies, exciting models, new model launches, long waiting list for them. And operating leverage is coming into play. Commodity prices are pretty much contained. So on the overall picture, when you look at these three companies, I feel that Maruti and M&M score slightly higher than Tata Motors. So I know the stock has rallied today, but I wouldn't look at participating in it.
Okay, all right, Dipan, you have a good weekend, and thanks so much for stopping by. I'm glad we're ending on a positive note. So we look forward to chatting up with you next week itself. By the way, those pullbacks that we've seen the last 1 hour or they've got sold into. Final 30 minutes coming up. Let's see whether or not we get a bit of a bounce from the low point of the day. For the time being, slip into a short break. On the other side, our alpha manager of the day, Trinity Bhattacharya, Fieldwise AMC, will be joining in.